Hey everyone, it's Mike and welcome back to the Order Flows Absorption course, module number 5, Reversals versus Continuation. Before I begin, brief disclaimer. This presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and it's not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, so most traders, right, they consider themselves trend followers. Honestly, most of the traders that you meet online say, I'm a trend follower. That's the easiest way for them to describe their trading, because trend followers tend to lose more, have more losing trades than winning trades. So I sort of feel sometimes that these traders will say, well, I'm a trend follower, so I don't need a high winning percentage. But the one thing that I find common with them is they all rely on price-based indicators, which is based on information after the fact. As you know, my feelings on price-based indicators is to take into account too much stuff in the past rather than what's happening now. Now, humans are what I consider herd animals, like horses or most animals. They tend to move in packs, and humans are no different. You see it. The way the retail traders act is this herd mentality. Now, what I like about order flow is it doesn't only use price. There's also volume, aggression, and time. And that's going to give you, a trader, the opportunity to take advantage of a move earlier than the herd, right? And what you're going to be looking for is the move. You got your continuation. You want to have your signs of the continuation and your sign of reversal. With the order flow, it's going to tell you why this divergence worked versus this divergence, why this one failed and this one worked. So absorption in a trend, right? As a trader, the most frustrating part of trading is watching the market make a big move while you're sitting on the sidelines. We've all been in there. We're like, should I buy or not? Then the market makes that move and you're sort of kicking yourself. By the time you get into the position, you either buy the high or sell the low, and you're left wondering, is there a better way to trade? And while it's nice to buy on pullback, sometimes the market just doesn't offer you a pullback to buy into, and you can only trade what the market gives you. You can only trade the opportunities that the market gives you. I put the word "what" in there. You can't force trades. When you try and force a trade, you're taking a trade that isn't necessarily there yet, right? You got to let the market reveal itself to you. Okay, so just go back to this chart here. Okay, so why is this a reversal sign? Well, if you're looking at the order flow, this one just screams out at you, actually. Point of control, prominent point of control. Look at the volume that's traded up here. Very heavy volume. These traders are stuck. They're long and wrong. Look at this volume: 1,300, 1,000, 1,200. Even on this move up, do you really see volumes like that? Not really. Where the market's reacted, on the move up, you do see some heavy volumes like in here. Now, this heavy volume in here, to me, is support in the market. Even though we hit that high, you got the divergence. You rotate around this level, right? You got the big stack buying imbalance. You come back into it. You got support in here. The aggressive buying that was here is still here. People are still buying this area in here. Even in here, just above this stacked buying imbalance, you got that supportive buying, right? You do have the divergence, though. So you got a divergence. You don't have the ratio, the bearish ratio, but you're seeing more signs of support in here. And then the big aggressive buyers coming in as you're taking out the highs. The sign, even though you don't have a divergence here, you got positive delta, big strong positive delta, 1,400. You say, why are you buying such a positive delta? I'm not buying a positive delta. In fact, I'd be looking to sell it, right? What you should be doing is saying, well, okay, I got positive delta at the high, but why? And didn't the market go higher? Why is it a red bar? Well, I know up here I have resistance in here. I got some absorption. Everyone, these are trap traders. I talked about that earlier, where you have traders getting trapped. There's often a sign of absorption, and here you have it right there, clear as day. Why do some highs work? This one works, this one doesn't. Well, I gotta be looking in here. What's going on in this market? You got the small delta. Okay, maybe thought, okay, well, maybe this could be reversing. But if you're watching what's happening in here, look at this volume in here. You have very strong supportive volume right in here. I mean, fortunately, this one failed really quick. So, even if you got short, honestly, if I'm looking at this high, I'm seeing this bars coming in here, small delta, I'd be willing to take that shot to get short, get stopped out. Okay, fair enough. I get my next high, I got my divergence, so I got my negative delta, I've got my ratio, which is also a sign of, in this case, is a sign of price rejection, price exhaustion. But if you're looking up in here, next bar, very small positive delta, 93. What's important about this bar that you can take away is look at this max delta, 1939, ended up at minus 600. Okay, so it went from positive close to positive 2,000 early in this bar. We're trading up here, a very strong positive delta. And it turns fairly decent negative delta, minus 600, as the market starts trading down. And look at these deltas in here. Well, this one's small, but it went from 1,400, positive 1,400, to ending up at only 93. So it gave it all back. This one's kind of mixed. Then big, strong negative delta. You can get to be short. There's absolutely no reason not to be short anywhere in these three bars in here. If you're not convinced of this high, ratio and divergence, and even this next bar, plenty of opportunity in these bars, plenty of reasons to be getting short. And then look at that, boom. The bottom just falls out here. The one bar moves from 53 down to 43, a 10-point move in the S&Ps. Boom, it's all right there. It's just, that's why I say you can only trade the opportunities the market gives you. The market's giving it to you on a silver platter here. So once you determine the direction of the trend, the next step is determine if the trend is sustainable, right? How are you going to determine if the trend is going to continue or not? Well, watch the deltas. That's the first sign of the trend continuing or not. Look for supportive buying as well. That's another key. Right here, you got the aggressive buying. What do you have supportive buying? I see selling imbalance in here, selling imbalance on these green bars. Point of control towards the low. This is a bullish sign in the point of control. Here you got a bullish prominent point of control, right? Like I said, what's the market telling you? You got a stacked buying imbalance that held here. Another stacked buying imbalance that held. Now you get up here, you start going sideways. Things are changing, right? You have your trend. You got every sign in the world telling you that, this trend is legitimate. But once, trend eventually is going to end, and you're going to be looking for some signs of possible reversals. You're starting to see it up in here. But really in here, going higher on negative delta, right? That's bullish, right? I've told you that. That's bullish. Go with the price action of the bar. That's your supportive buying. What's happening is people are hitting these bids, but you have a buyer in there supporting the market. It's absorbing all that selling that's coming into the market to try and move that market lower. People are bidding that market up. So not only does volume help you identify a trend, it also helps to confirm the trend, right? And it's one thing to say, oh, there's a trend, but you need some confirmation, right? Just as you have here. Yeah, I think we're trending. Well, I'm not sure. Okay, well, you look at the volume. What's happening? The volume's in the bar, the volume's below. Here you got a nice healthy move up. You got nice positive, it's not positive. You got nice healthy volume, 1,800, 2,000, 2,000, 3,000 as you're going higher. So the volume's increasing as well. Heavy volume, I just talked about, at certain price levels, define support or resistance in the bar, right? You got your supportive buying. Look at these heavy volumes in here. 400. In this bar, what do you got? You got 150 here. You got 218. So you've got some supportive buying in here as well. Now on the downside, people don't really think of absorptive buying. That's a term. I was trying to think of the term to describe it. Buying, absorption, absorptive buying. It can go either way. But on the downside, you're going to be looking for, at the lows, is there volume being traded on the bid side down here? Yeah, there is. As you're coming down to these lows, look at these volumes. 50. Get down in here. Here's 100. That's not that much, but look at this volume in here. 100, in the hundreds. You get down in here in close to 200. 200 here, 181 here. 207. So I know there's support down here. It's found a level of support. Somebody came in and said, you know what? 113.08, 113.10. I'm a buyer. I'm bid. That's holding that market down. Again, you're seeing the bullish sign here in the point of control, but you're seeing the positive deltas as well. So look for that absorptive buying, absorptive selling. Like resistance selling, I guess, would be the better way to describe it. But look at these volumes here. 1200, 1200. You don't really have much here. 800. Where's their heavy volume? Here's 800. Do you have any sort of volume like that here? No. 500. Here you got 500 as well. Here's 700, 400, 800. It's more resistance selling. Here, people offering it down. 800, 400, 800. Yeah, I mean, obviously they're selling it, they're hitting these bids as well. But, I mean, look at this, right? You got this bar here. The delta is minus, what is that? Minus, I think it's this one here. Minus 734. Okay. But when you look at the volume, I mean, you got this big volume in here of 1200, 500. Which normally on these bars down, you're not getting that sort of volumes. 800 is bigger, 700, 800, but someone's offering it here. Someone's offering it here as well as hitting the bids, right? You got this big volume and you think, why you got such a big negative delta? Well, you have someone offering it out as well as hitting the bids, hitting the bids, hitting the bids all the way down, 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 down. So when coming to resistance with strong volume and the market goes sideways and still shows strong volume, that's a sign the market still has some upside capacity to it. Don't get short just yet. You want to get short after coming to resistance with strong volume. But once you start going sideways, volume decreasing is a sign that buyers are drying up and becoming exhausted. You got to look for the sign. This is the sign that the market is ready to sell off, right? Just because you hit the high, don't imagine it's one thing to look at a chart and say, well, we hit this high, I can get short now. No, because it could just go sideways and then go higher. Look for the signs that the interest is no longer there. So basically, you come up into this high here. You got heavy volume, 2,000, 2,000. Then it just sort of goes sideways. Volume is kind of light. And then you're running in here, this bar here, 1,000. Okay, all the other bars, 500, 400, 300, 400. 400, 500, 400, 600. It's kind of listless. You're running into an area of consolidation. So you're going to look for a sign, and here's your sign. Boom, the big seller's coming. Minus 115 on the delta. The volume, the min delta is minus 338. The volume, minus 1181. And people have said, okay, you know what? We're not going higher anymore. Now I could trade the reversal. Right? I mean, you could have, maybe you could find a reason there. I don't want to dissect this part in here, because to me, the sign for sure to be getting short is right here, this bar here. I mean, you got the bearish ratio as well, but that heavy volume is the sign to me that sellers have awakened up and said, you know what? We're tired. The market's not going higher. We had our chance here to go higher. It's not. I mean, how many times? Let me ask you. How many times have you bought like this? Right? You've bought this high, or on the high, market's come off. You're holding it, thinking the market's going to come back, and starts coming back. Hey, we're coming back. Then it starts selling off. This is where you get out. Then the market falls over. Or you're happy to get out here before the market falls off, because you're happy to get out here because you're not going any higher. This is where the volume picks off, right? You got your lesser volume in here. Everyone's waiting for the market to come back up and rally, but it's not. It's not making that rally. Okay, so when a market moves into congestion, it's hard to determine direction, right? I just showed you, right? We came into congestion, and it's hard to determine yet. This is your sign here. So oftentimes, buyers and sellers are evenly matched. Prices trading in a narrow range. Okay, now this one I put in here. This is a Fed day, actually. This is March 20th. Obviously, you got the big move up there after the Fed news, but you know, forget that part right here. We're coming into this area in here, congestion, right? I talked about this earlier. Consolidation, rather. Look at the volumes. 7,000. For the hour before, the volumes are much lighter than it was earlier. Here, you're above 10,000 is kind of your average. Here, below 10,000, close to 5,000 is more of your average. So it's a lot less. So when we're coming into congestion, I should add / consolidation here. It's hard to determine the direction. Well, again, I wouldn't be trying to decipher what the Fed's going to say based on the price action in the S&P futures. I'd rather just wait for the Fed to make their news rather than trying to figure it out. But again, forget that this is, put your hand over this area over here. When you're in consolidation, it's hard sometimes to figure out which way the direction is going. What's the signs of consolidation? Well, smallish deltas. I mean, here you do have some big negative and some big positive, but we're not going anywhere. Volume is lighter. That's the other sign of consolidation. Point of control is more or less around the same level. That's also a sign of consolidation. So for consolidation, look for point of controls around the same level. I'll just write that on here. Signs of consolidation. Can't type. Consolidation. Lighter volume than normal. Lighter volume than average, I guess. POCs around the same level. And delta, you should have how to phrase it. I don't want to say small deltas, but sort of meaningless deltas, like big deltas in one direction. Okay, well, I'll write that. Small deltas or big meaningless deltas. Now what I mean by big meaningless deltas is you got the big deltas, right? 1,000, but then it comes back with small deltas, minus 1,000 small deltas. The market's not going anywhere. You should have some sort of movement after that fact. Okay, and if you don't get that, that's a sign of consolidation. So these three here are big meaningless deltas with little follow through, little to no follow through. Okay, I can't type. Little to no follow through. So back to absorption continuation. After a big increase with a weaker volume pullback, you're going to see some absorption and continuation. Okay, now what do I mean? What it looks like on the chart. You're selling off, market rallies back up, gets slammed again. Okay, volume drops off, right? You got your heavy volume sort of drops off here, rallies back up, heavy volume comes back in, market continues in that trend. So when a market's been selling off and there's a bar with heavy volume followed by a bar with weak volume, shows there's limited buying. I look for the lows to be taken out in the market to trade lower. Now, of course, what I write here, this, I say, like for example, okay, market's been selling off. There's a bar with heavy volume followed by a bar with weak volume. Okay, now that doesn't mean it immediately has to follow it. There might be a bar in between or something where you get your weak volume. But again, trading is not an exact science, right? It's not like, that's why I think engineers are attracted and programmers are attracted to trading. It's because they think they can solve the problem with exactness. In trading, oftentimes there is no exactness. And what do I mean is, for example here, right? So you're selling off, right? You got your big down bar here. Then you go sideways for a while with lesser volume. You're averaging very decent volumes in here, 13,000, 15,000, 2,000, 20,000, 17. Okay, then you get your small and your reversal, 12,000, 12, then boom, 16,000 again. Okay, then it goes sideways again, 10,000, 8,000, 11,000, 10,000, 9,000, then wham, 17,000. You're looking for that sign of the selling coming back into the market. This is your pullback here as you're about to go lower. So at a high, when there's heavy volume at the high and the next bar exhibits light volume, the sellers did not yet come into the market. So watch to see if we break out the new highs and continue the trend. It's often a sign of profit taking, or it could be indicative of traders not sure if the trend is real. Okay. If the market doesn't revert back to the mean, as most traders would be looking for, the trend is real. And what do I mean by that is, all these mean reversion traders, when we're at highs, they're always, they're looking for the market to sell back off again, come back down into the lows, and revert to the mean, not to the lows rather, but rather to the mean price. And best way to show it, I guess, is, let me get an example here for you. Not sure if this next chart is the one that I want. Okay, so here we got, we're at our high. We sell off, hit our high again. Now, in the order flow, this is not a high I'd be looking to buy, honestly, just on the pure order flow. But, anytime you come back to a high, you're going to be asking yourself, are we coming up to the high or not? What do you get? You got your heavy volume right here, 14,000. Look at this relative to the previous bars. People are coming in. No, we're not interested. We're selling this bar here. We're selling these prices up here. That's why you got the high volume there. So, I said, when we're at a high and there's heavy volume at the high and the next bar exhibits light volume, what you're seeing here is actually the opposite, right? You're at your high, you got your light volume. Next bar is the heavy volume. Sellers are coming into that market. So if you got heavy volume on the sell side, do you think the market's going higher or lower? Well, it's on the sell side. We should start going lower rather than higher. Okay, so here, here's our high. We sold off. Get sold off to an area of heavy volume in here, 16,000, 16,000 again, 16,273, 16,932. But then you just go sideways on light volume. Okay, so yeah, you had your sellers, but it was met with some decent buying in here. Go sideways. Honestly, I would not be looking to trade either one of these bars. Maybe this bar I'd be looking to get short, but if I was short, I really wouldn't like it. The fact that we pull back up through this imbalance, I don't like that when you do that with imbalances. And I don't like when you get a red bar, the stack selling imbalance, and then followed by a green bar. It's got a higher chance of failure, especially when you trade back into it like that so much. I really like it to just sort of hug that area. But nevertheless, we sort of go higher, drift back up to the high on light volume, right? Do you think we're going to hit that high if we're going up? Earlier we're hitting this high on volume above 10,000. Now we're going back up on volume less than, around 9,000, 7,000, 9,000, 9,000. And the sellers come in. We've got the volume coming in and saying, no, you know what? We're not going any higher. Now, absorption often leads to sideways price action. I hate to admit it, but, I like to say that, order flow is not going to predict every market turn in the market, because oftentimes the market just goes sideways. There's sometimes there's no way you can control that. And thing to remember, keep in mind, is you can go sideways with absorption before it continues in the move or it makes the reverse. And the signs you got to look for is when the market gets to highs or lows, watch the delta. As the market is making new highs, look for green up candle bars, up bars with extremely strong delta on green candles above average volume, followed by a red candle with negative delta or small positive delta. As the market's making new lows, look for a down red candle bars. Yeah, it's a bit confusing. I should just say look for red candles or look for green candles. I think start putting in all these things, people get confused. Look for green candles. Again, most people nowadays use candles, but some of the old timers, they never really made that switch to candlesticks. They still look at the normal bar charts. But I like candles because I'm a visual person and it's very visual. So as the market's making new lows, look for a red candle with extremely strong negative delta above average volume, followed by a green up candle appearing with positive delta. So, we're at new highs, but watch the deltas. Okay, you're at new highs here. Why is the deltas negative? That's not a good sign. Okay. Why this and not this? All right, you have a low here. Market started a rally, came back down, made new lows. Well, go back to what I was saying earlier, right? Look for the red candle with extremely strong negative delta, above average volume, followed by a green candle. Green, yeah, I'm confused by that too. By a green candle appearing, if my English was correct, with positive delta, right? That's really what you want to be looking for. And yeah, you can see, well, here, you got yeah, you got the red candle, you got some decent volume in here, 25,000. Now granted, forget this part here because this is before the cash open, so this is your cash opening here. You got the low, you got strong positive delta, positive delta, positive delta. But what's happening in this market, right? You have that absorptive selling, that resistance selling, absorptive selling, resistance selling in here. That's why you got that positive delta, 1528, but the bar's red. People get so trained on looking at these numbers, sometimes they forget to look at what's happening in the actual bar, right? You guys say, what the F? 1528, biggest, strongest positive delta, but the bar is red. Why? It's because everyone's trying to buy this. Everyone's trying to buy this here. But you have the resistance sellers in there. Market makes that new low. And then you start seeing the green bars coming in here. Notice the volume is lesser. The volume now is half. We're sort of undecided here. You got point of controls at that same level. This bar comes right down to that point of control. This bar here right down to that point of control. You got the positive deltas. You don't have this divergence of bar and delta color. It's everything is red that should be red. Everything's green that should be green. Really, this is sort of the sign. If you were looking to buy this in here, yeah, you could have bought it, but if you bought it, you could have got out in here at a scratch or a small loss and gotten short, because this is a very bearish, very negative bar. This is the resistance selling, the absorptive selling, so to speak, in there. But again, it's kind of hidden. You got to look for it and make sense of that. But let me just go back here. So again, making new lows, look for the red candle with extremely strong negative delta. New lows, extremely strong negative delta. It's got the above average volume, followed by a green candle appearing with positive delta right in here. Now, the other thing that's a bit different in here is, this bar it is bullish. It's an engulfing pattern. This one is an inside bar. People ask me, when you're trying to mesh order flow and candlestick charts, I prefer the inside bar to the engulfing bar. I think to me, this, because when I see the inside bar, I see absorption. I'm automatically drawn to absorption when I see inside bars, as opposed to engulfing patterns. Engulfing patterns, I think more people are looking for that. People sort of disregard inside bars because the market's going to go sideways. When I see inside bars, I'm looking for some sort of signs of absorption. I'm looking for some more market direction. Now, when the market reaches an area of consolidation due to absorption, it does not mean that there will always be a reversal. Again, sometimes you're expecting a reversal, it doesn't come, honestly. And the market can trade sideways and then eventually continue its initial direction, right? We all like to think that, well, you hit absorption, the market should stop and reverse. Not always. It can go sideways and then continue its original direction. When the market comes into an area of absorption, one side of the market thinks the trend's going to continue, the aggressive traders. The other side thinks the market's ready to reverse, the passive traders. So here we went sideways before selling off. Right? Sideways, new low, sideways, sideways. Now, we all wish that there would be like the nice V-shaped patterns, come down and rally back up. But unfortunately, the market is not like that. It's like dating a pretty girl, but maybe she got some personality flaws. That's what the market's like oftentimes. But again, look for the signs, right? You hit your sign up here, right? You got your high, got the strong negative delta. Yeah, maybe you're not convinced. Look at the imbalances in there. 1, 2, 3. Look at this in here. Volume, slam. Sellers are triggered. they're thinking, hey, who bought this market up so high? And then they start selling it down, selling it. You got the imbalances in there. Strong negative delta, 3,000. Volume, double, 11,000. And it just sort of goes sideways before continuing back on down. Just as here, right? You're coming in, you're making these new lows, get the inside bar going sideways, big down bar again, strong negative delta. Here you got 14,000, but here you got 8,000. So it's lesser. It's not half, but it's maybe 40% less. You got this bar 9,000, still decent volume, relative to what you're looking at earlier. Okay, but you got a small positive delta, 189. Here you got delta, positive delta, red bar. Here you got buying imbalances, 4 of them, 5 of them in this bar. Okay, you're really looking at this point for this market to take off. It rallies a little bit, not much. You got some supportive buying down in here. When you come up in here, you got resistance selling. But for me, more or less, I look at this, it's just a market going sideways, even though it's trading basically between 59.15 and 59.40. What is that, a 25-cent range? It's for me, it's a market that's going sideways. I'd be looking for it to rally up in here, up to this prominent point of control. But once you hit that prominent point of control, I'd be looking for some sort of sign that the market's going to sell off. But it doesn't. Yeah, it does. Not much, 10-15 cents, just as it was at rally. Yeah, 10-15 cents. So not much. For me, that's a sideways activity, even though all the signs are giving me, longs and shorts. Again, absorption can lead to sideways action where the market can turn or resume. Remember, when absorption occurs, a reversal does not always occur. It still depends on what happens in the market, right? You got to manage the trade. That's what sometimes people forget. And I want to scream sometimes is because, I talk to guys and they tell me, oh, I got into this trade and it was working, then reversed and stopped me out. And I'm like, well, why didn't you get out? If the signs were there that the market was reversing, you got to get out. Don't let the market take you out if you can see what's happening in the market and you're smart enough to get out on your own. Again, the key part is the part that gives confirmation that the market will go sideways is the following bar, being an inside bar. I always love these inside bars. It's sort of a secret, a secret of mine, because basically what I'm always looking for, right? When I make a new high or new low, what's the next bar after that? Is it an inside bar? It's got me more interested than if it's an outside engulfing bar. I'm looking more for the inside bar, right? Because that to me is more of a sign of absorption is coming, and we can go sideways or we can reverse, or we can fail. But generally we either go sideways or reverse. I could deal with sideways. I could deal with cutting a trade at break even plus a minus couple a lot easier than I can, getting stopped out and taking a big loss on the trade. Big loss, but taking a loss on the trade. Sideways, it's frustrating, but if you got 2 out of 3 chances to make something on the trade, I'd rather take that. So again, the trend is your friend. I say that in every freaking course, every video, everyone on the internet, I think, always says that as well. Of course it is, but before a trend occurs, it needs to start. But how does it start? It needs a push, right? It's a little bit of momentum, needs to build up. This is where absorption comes into play, right? Normally you would not think of absorption as momentum, but what's happening in the market, right? The market moved in one direction, then it met either support or resistance, which then pushed it back in the opposite direction with early momentum, right? When it hits the other level. Right? If it goes from the low area with absorption at the low to an area with absorption at the high, that's your momentum on the high, right? Your early momentum that the trend is reversing. So this concludes Module 5. In Module 6, I'm going to discuss absorption trade setups. And you'll learn clear-cut trade setups that you could add to your trading arsenal. Again, I don't think you should take each one and say this is it, it's written in stone. You should take them and build your trading plan from. So I'll see you on the next module. Bye-bye.